So let's continue. We're talking about directional bias, and we say directional bias is in you knowing the overall trend of the markets, where buy or sales are coming in the markets. And you take advantage of that as a trader to follow the original bias of the market. We say there are two ways market make it moves. For markets to maintain current move, the first move that breaks structure to the upside. For markets to maintain this bullish structure, we will expect market what? To take out this high, this key level or this resistance level. When we go a break of structure to the upside, so we know that we can use the concept of continuation. What do we want to see in the concept of continuations? A break of structure. So we want to see market break structure to the upside. Market break structure to the upside, and then we expect markets to do what? Correction move into the range, which we're going to talk about in our next class, which is going to be a very interesting class. Then we expect what? Continuations of these what? Uptrends. So we have two ways we can trade. We say we can trade the what? Continuations or the reversals. We expect those based on what markets present in a moment. So when market give us a break of structure, so based on the what I told you about continuations, we expect what? Continuation pattern. Market drop into the range and then what? Continue pushing up to maintain this current structure. This is what you want to see in higher time frame. So if you see this kind of structure in higher time frame, based on market structure, you know that market is clearly bullish. Market is clearly bullish. So but all of your setup, all of your trades, you'll be what? Following the overall bias of the market, which is bullish. But when market is making bullish move, we know there's two-way market make the move, right? We have the what? The impulsive move, then we have the correction move. So as a trader, it's not only for you to what? Trade the impulsive move and leave the correction move. Before, if you say you want to do that, let me give you an example. This is a BTC. Let me try changing this is BTC. So if for me to wait, we need that clearly we know that BTC is bearish, giving us what? Series of what? Lower lows, lower highs, lower lows, lower highs, lower lows, and then lower highs, lower lows, another lower high. And then market now print another lower low. We expect what? Markets to correct back into the range and then what? Continue selling down. But we cannot just expect this correction to come from any zones. We expect them to come from the zones that were broken before. The zone I talked to you about. Any zone that market did not respect when it was buying. In this case, what? If you go to the higher time frame, you marked out the zones that you expect this what? Correction move to last all the way before it ends. Then you expect another what? Impulsive move. Those zones are higher time frame key labels, a broken zones. You see, there's an order block in higher time frame the market did not respect. So you expect what? This what? Impulsive move to come from the zones. You marked out all of these zones the market no respect. There's an order block here the market did not respect. So all of these zones are the zones that you expect what? Market to come and tap into, and then you expect another what? Impulsive move to come for markets to maintain this higher time frame structure. So what do we learn here? We said these zones, this order block that market has not used when it was buying, we're going to use it when we are selling. These are the zones that you expect markets to come into the range, then you expect another impulsive move to come. This is higher time frame bias. So when you're buying, it's not like you wait for impulsive move. Can you see, like, if for me I only trade impulsive move, this is why the last impulsive move started, and it lasted from since what Friday 8th May all the way to what June. You see, that's about 1 month for this impulsive move to finish. So let's say I only trade correction move. So I have to wait for 1 month before market taps into a zone where I expect correction move to come. So you see, if I'm like only following the original trend of the market, I'll be waiting for like a month. Like this one, you see, this one was correction move. This move that happened from this zone all the way to that zone is a correction move. And it lasted since from what? February to what? To May. So you see, that's about a month of what? Waiting just for market to do this correction move and then expect what? This impulsive move to come. I have to wait for 3 months or 2 months for markets to what? Finish the correction move, and then what? I'll trade the enforcing move. So if I say this is the kind of trade I'm going to take, so I can be waiting for 2 months, 3 months, or 5 months before I take any trades. So that means I should find a way to trade the impulsive move and then find a way to trade the correction move. This is knowing directional bias. This is what we talked about last class, and this is a representation of the class. So you see, all of these broken zones that were market did not use when it was buying. So when market started selling down, you don't expect them to hold, right? Just like what I explained last time. I said when we have an order block, market creating what? A series of order blocks, and then just keep buying to the upsides. So when it was selling, when it started selling down, all of these zones, you don't expect them to what? For markets to what? To tap into these broken zones. All of these zones. You don't expect markets to come and tap into the zones and what? Started going off to the upside. A lot of you guys, like, what, they'll mark this press zone and they'll take their trade all the way to all-time high to take out all this original high, thinking that market is still bullish without reading the market structure. So this is something that you should not be doing, because when market started selling down, those zones are made to be what? Violated, just like what happened here. Just like what happened here. You see, this zone market did not use it when it was buying. Same thing with this zone. But when market tapped into higher time frame key level, what are the higher time frame key level? Then you go and check. There must be a zone where market is reacting to, where this sell is coming from. It's coming from this daily order block that got failed, which is what? The breaker block. You see, market tapped into this breaker block. That means this correction move has come to an end when it gives you that reversal concept that we're going to talk about. Any zone that market tapped into, you have to wait for market to give you that concept, either continuation concept or what? Reversal concept. So when my market tapped into this higher time frame key level, all of these zones that market did not use when it was buying, you don't expect them to hold, because original trend is going to come. And the next target for that trend to maintain is to take out this low. This is the what? Target of the overall trend. So since you know the target of the overall trend, what are you trying to, why are you trying to fight it? A lot of traders, like, if they see market is bullish, they will just consider market is bullish, but they don't know that in higher time frame, this bullish structure is what? Correction move. And you see a sell is coming from a higher time frame key level, you should not be looking for another buy anyway, because you know that all of these zones are the zones that you have to what? Just noted that what? A reversals might come. Because these zones, failed zones, when market tapped into this failed zone, this OB that market has not used when it was buying, these are the zone that you have to wait to see the reaction from the zone. A correction move may come from the zone, and then market what? Keep going down and tapped into this press zone again. Then you expect a correction move before market go into what? Your directions. These are the zones. When you understand how market structure works, which is what? The impulsive and the correction move. So the impulsive move, I will expect them to come in higher time frame key levels. And then the correction move, we expect them to come from the what? Lower time frame POIs that market has not used when it was buying. This is what I'm going to explain here. I said when market tapped into a what? Higher time frame supply zone, a resistance level that you know that already market is what? Bearish in higher time frame. But when you go to 4 hour, you see this structure. So you know that definitely this structure is bullish, but in high time frame is bearish. So then that's mean this current structure, this bullish structure, is just a correction move for the higher time frame. And the correction move has finished. Market tapped into a what? A supply area. This broken resistance level, this one that I marked. Let me mark it. Wait. This zone. Market tapped into this zone. When you go to 4 hour, you see this same structure right here. When you go to 4 hour, you see this same structure right here until market tapped into this supply zone, this broken order block, which is what? The breaker block. And then from that zone, this is why you expect markets to what? To retrace back. So if you trade higher time frame, if you trade lower time frame, you must know what higher time frame is doing. You must understand what are you expecting, what this buy that is coming from, what is it? Is it a bullish? Is it a impulsive move? And if it's an impulsive move, then you know that this impulsive move is meant to drive the market in the current direction it wants to go. So if this move that comes, it's an impulsive move, the targets, if this move that is coming, this move that started from here is an impulsive move. Since you know higher time frame impulsive move is coming from a zones that go broken. This OB or what? This breaker block or this OB right here. These are all zones that you expect markets to what? To come and tap into before what market give you that impulsive move again. And anytime market taps into these zones, you expect markets to what? To come to the zone. You expect markets to what? Give you that reversal concept to what? Continue selling down. Because this correction move, when it ends, you need to see reversal concept before you take a buy. Same thing when what correction move is coming. You want to see a reversal concept before you take even the correction move. That means all of these moves, before they begin, you must see what? Reversal concept. When it is what? Impulsive move, at the end of the impulsive move, you want to see reversal concept formed at that zones. These zones. You see this zone is where we expect we see a reversal concept that coming, and this zone again. And now market tapped into another zone here. And it's coming. If it's a reversal concept, we want to see a clear what confirmation, a clear structure formed, that reversal concept that we talked about, which is what the market structure shift and then your liquidity. We want to see market structure shift for what? Continuation for reversals. So when market gives us that reversals, so all of our trades is going to be what? Buys, because we know that this is a what? Correction move is coming. Then we go to higher time frame to look for zones that we expect markets to what? Tapped into before we sell. We keep coming to the what? The overall direction of the market, which is what? The impulsive move. And it can be either this breaker block, if we get confirmation entry. If we didn't, we what? Expect the another what? Impulsive move to come at this fail OB right here. When market tapped into the zone, the first thing we want to see is what? We want to wait for market to give us that reversal concept. When we go that reversal concept, so we know that, okay, this correction move has come to an end. Now we're trying to make another impulsive move. And what is the target of the impulsive move? Is what? To take out the last low, which is what? This low. This low. So any OB, any order block inside this range, any 4-hour or 5-hour or 1-hour order block inside this range, when market tapped into this higher time frame POIs, we don't expect them to hold, but we might be expecting it to what? To give us another correction move for lower time frame. We expect them to give us a correction move for lower time frame. Same thing, combining the higher time frame bias with lower time frame bias. I want you to get time to understand, to rewatch this video to understand what I meant. When we have these zones, you see there's an order block right here. If you go to lower time frame, this is a 4-hour order block or 2-hour order block. Market did not use it and market started going off. Let's say market go all the way off to this zone and we got a reversal pattern at this zone. So we know what higher time frame is doing. We know the higher time frame is bearish, but market is lower time frame is bullish. But we know that this bullish is just a correction move to the higher time frame. So when the sell is coming from this zone, this OB the market has not used in 4-hour, we just expect them to what? React to the zones. When market come to the zone, we expect what? A correction move to happen in lower time frame. Then we expect another impulsive move to come in lower time frame. That means we combined higher time frame with lower time frame structure to trade. So let me emphasize this, because this is supposed to be our next class, but I try explaining it. I think I'm rushing or something like that. So we said these zones, this failed OB in higher time frame are zones that we expect what? Our what? Continuation of what? Impulsive move to come. And if we see an impulsive move drive the market in the current direction it wants to go. That means we're bearish. So when market tapped into this zone, this is where we want to see market give us what? This reversal concept. If we did not get reversal concept at this zone, that means it's not time for markets to sell from the zone. Then we expect what? This extreme demand zone. There's a lot of demand supply zones. This is a zone that we expect another continuation of original trends to come, or this OB right here sitting above. But if we get past this high now, this high for higher time frame, so that means we have a market structure shift in higher time frame. That means we're no longer bearish, because this is the high that's supposed to break a structure to the downside. And you see it's a protected high because it did the job. What is the job? A strong high is to take out strong low. You see, it take out this strong low. So this high is protected. This high is protected. This is how we call a protected high. A protected high is the one that take out a low. Same thing, a protected low is the one that take out a high. If we say a protected, we mean a strong low. There's only low chance probability market might take out this high if it really wants to continue selling. So there's only there's no reason for market to take out this high, which is like sellers will not allow market to take out this high if you really want to sell. You cannot see something like this. Market come, take out the high. Market come, take out this high, close with a pull body and sell again. It cannot happen. It cannot happen. There's no way market to take out the high and sell again to break another structure to the downside. It cannot do this. But market can come and sweep the high and still continue selling down when there's no enough liquidity. We expect sweep of liquidity when there's no liquidity at the zones. Like this supply zone. You see this supply zone where we expect this reversal concept to happen. You see there's no any liquidity at the zones. There's all of this tone imbalance. So we expect market to either create liquidity at this zone or market push all the way to take out all of this liquidity and then tapped into this zone before we expect another sell. That means all this is a liquidity. This highs the liquidity. And this zone that we expect market to tap into and continue selling, there's no liquidity. So market might come and sweep this liquidity before going down. Market need liquidity to go. So that means even if it wants to go to the overall directions, you need to have liquidity before market go all the way down, because liquidity is like a fuel to price. So this zone, we cannot just expect markets to come and tap into this zone and just sell down from there. It might do that, but it need liquidity. Before you do that, you want to create liquidity. Either engineer liquidity and then tapped into the zone, then started selling down. But if there's no liquidity, you have to know, market must create liquidity at the zone and then started selling. So when you're trying to trade directional bias, I say the first thing you need to do is knowing the overall trend of the market. So we know that market is currently bearish. So all of these zones, we expect them to fail, because market tapped into a supply zone that we expect another impulsive move to come, which is what just did. This is an impulsive move. An impulsive move is it try to it means to push the market in the overall trend it wants to go, which is downtrend. And the purpose of this impulsive move, it to take out this low. So all of this OB the market did not use when it was buying, a market taps into this supply zone, we don't expect them to hold, because they're not going to. There's no longer valid, because market is currently trying to go to the original direction. It's trying to make the impulsive move. So all of this OB, we don't expect them to hold, because this is not the target. But we might expect them to have a reaction. What do we need is these zones to have a reactions. And that reaction is the correction move at the zones. And we cannot take even the correction move until market give us a proper, until market give us a proper reversal concept. We talked about reversal concept. At that zone, then we expect, okay, this is a correction move. And market tapped into another supply zone. This broken OB, which is the breakup block, and then we expect another continuation in lower time frame. But we know that all of this move, starting from here to here in higher time frame, is a impulsive move. But inside the higher time frame impulsive move, we expect another lower time frame impulsive move and lower time frame correction move. Let me show you an example. We said the first thing, if market was buying, we know that this buy is coming from a what? A higher time frame correction move. So this is a what? Correction move. So when you go to lower time frame, 4 hour, market tapped into a what? Higher time frame demand zone here, where we expect the correction move to happen. But we're not going to take the correction move until we have a confirmation, or until we have a structural shift, which is what? Our what? Reversal concept. So when you go to lower time frame at that zones and read the structure there, you have to look for what market structure shift at that zone that market tapped into, which is what this OB that market tapped into. I think I gave you an example on this last on our last class, that we have a what? A market structure shift at these zones, our liquidity at this zone. Then this is our unmitigated point of interest. This one. This is our unmitigated point of interest, which is this OB. And this is the OB that we expect markets to come and tap into before continuation of this what? Move. And we know that the move for higher time frame, this one is just a what? Correction move. So when we're trading the lower time frame, we expect what? This is what? A correction move in higher time frame. But this is what? An impulsive move for us in lower time frame. So we're trying to trade all of this impulsive move. What do you want to see to take a what? Continuation. So we want to see market breaking structure to the upside. What are the breakup structures? We go to, you see, after we have this confirmation, we have this reversal concept at this zone. Let me mark it so that you can understand. Let me make it blue. At this zone, so we know that, okay, it's time for markets to start buying. We're bullish in lower time frame. And we're bullish until when? Until markets go to what? Higher time frame supply zone, where we expect a continuation of that zone to happen. So when we have this confirmation, the next thing we're going to do is go to higher time frame to look for possible zones that we expect markets to tap into and started giving another what? Impulsive move, which is what? This failed breaker block. We have this failed breaker block, and we have another supply zone here, this extreme OB. All of these zones are higher time frame POIs. We have to what? Be very curious about this. We have to be like crucial about this, because this one, we have to be very skeptical about these two zones, because these are the zones that we expect markets to tap into and then another impulsive move to come. So what do we learn here? We know that for markets to give us another correction move, we want to see a market structure shift, and we got it at this zone. So that means it's a time for us to what? It's a time for higher time frame correction move. But the lower time frame, me and you that trade lower time frames, we know that we are very bullish now. But higher time frame, we know that in the back of our mind, in higher time frame, this is a correction move. We know that, right? But we trade lower time frame. So in lower time frame, we're bullish, because we go a market structure shift at that zones. So after we come to the higher time frame to mark the possible zones that we expect the reversals to happen, to continuation of that impulsive move to happen, then we go to lower time frame to take our trades. So if you go to 4 hour, at those zones that we go on market structure shift, we take our pace buy, right? So the next one is what? To look for a structure, a break of structure to the upside, and take our another trade, just to what? To continue. But we mark these zones, this OB in higher time frame. We expect my reaction from there, and we will mark this supply zone also in higher time frame. These are the only zones that we expect markets to react to. Then we expect another impulsive move to come. Until market did not react to these zones, we don't expect any move. We only expect what? Correction move in lower time frame, because now in high time frame we're bullish. Yeah. So anytime we have a break of structure, we expect markets to give us what? Correction move. So after a break of structure, after this break, market give us correction move inside the range. After we go this break, also market give us correction move. And we don't expect all of these correction moves to come any random place. The same thing in high time frame. We expect them to come to what? A zones in 4 hour, which is what? Can be this breaker block. We have another supply zone right here. All of these zones are the zone that we expect this what? Correction move to come in lower time frame. We trade lower time frame. So all of these zones in lower time frame, these are the zones we're going to what? Pay attention to. I said in higher time frame, we expect markets to tap into a supply zones before we started selling down. And based on that, there are zones that we expect markets to tap into to give us correction move in higher time frame, like it just did. This zone, sorry, coming. This zone, the market what started buying from, we know that it's a higher time frame order block that our market has not used when it was buying. So it's a zone that we expect market to give us correction move in higher time frame. So in higher time frame, this is a correction move. But for us in lower time frame, this is a what? Impulsive moves because we expect the reversals. So we're very bullish all the way to where? To these zones that we expect markets to what? React from. This higher time frame breaker block. Let me mark them red. This higher time frame breaker block or this higher time frame order block, this supply zone. These are the two zones we marked in higher time frame. We expect what? Original trend to continue. But we're not here for the original trend. We're here for this cut to take this reversal. And when market tapped into that zone and give us another market structure shift, we take out to continue selling down. And what is the main purpose of that is to take out this low where our what? Correction move started. So you see, directional buy is something very simple to understand and very something to know what market is doing overall. So you see, when we got this market structure shift in 4 hour, so all of our trading is going to be what? We look for what? A break of structure and take our continuation entry. So from there, when we go down market structure shift, we take our buy from this zone, from this order block, and what will be our targets? Our target would be what? These zones, the market what? We expect a higher time frame reversals to come from, which is what? Sorry, this OB, this breaker block. This is what our target, because we know that this is a correction move, and the correction move will last until market what? Tapped into a demand zones or supply zone in higher time frame for us to continue. So everything we'll be doing inside this range is going to be a buy. We look for buy. We look for what? Structure shift, break up structure, and what? Look for buys. So anything we want to do is what? Look for buys. Anything we want to do is what? Look for buys. So again, we have a break of structure, break of this structure, market full into the range and give you what? Liquidity. Market give you liquidity, and then you have what? A zone that market has never used, which is what? This your order block as your what? Point of interest. This is where you can take what? Another buy from the zone. You're not there in last class, think last February and January class. We took this real live there. So, and then your TP what? Is same zone where we expect what? A higher time frame reversals to come from, which is what? This fail OB, right? So anything you're going to do is what? Look for what? A breakup structure, look for your structures, and then what? Just trade the markets. So the next thing is just like you have to look for either breakup structure or what? Multiple breakup structure, and just look for your what? For your what? For your trades. Just look for them. So even right here, you have a what? A breakup structure, and then your liquidity, and then your point of interest, which is what? This breaker block. From there, again, you can take your buy from there. And what is your target? You know that what high time frame is doing is a correction move. And then correction move, you expect it to come to this zone. So if you do not get a reversal pattern at this zone, if you do not get a reversal pattern at this zone, you'll not be looking for sales for that impulsive move to come. You what? Extend your what? Your TP if you want to, depending on the trader you are. Extend your TP all the way to where you expect another reversals to come. This is what this supply, exit supply zone. You extend your TP all the way to those zones. So you know that you know what you're doing. You know overall where market is doing. Is what correcting move and what making impulsive move. So this is how you can determine directional bias. This is how you can determine what market is doing. So at this zone that market tapped in currently, this one, market tapped into this uh zone currently. But did the market give you a reversal concept at this zone? Did it give it a reversal concept? Yes, it did. So now you know that you're in what correction move pattern in what in in lower time frame, because this is what we were in what 4 hour time frame. So there are zones that we expect what this 4 hour to what last. This zone that market tapped into is a higher time frame key level. It's not reacting from any zones, but market give us a reversal pattern, what breaking structure to the upside, giving us a market structural shift. And our what? Liquidity. And then what? Our point of interest. We take a buy from there. We know that we're in a correction phase. And what is our target? We go to higher time frame to know where we expect another reversal concept to come from, right? Which is the impulsive move. So then you go to higher time frame. At that higher time frame, you mark the zones where we expect what? A correction move to end. Because you know, we're now in a what phase of correction move. Then we marked all of these zones for higher time frame. This fail OB. We mark this fail OB. We mark another OB here that is failed currently. So market just tapped into, so we know that for higher time frame, these are zones we expect what? A reversal for this continuation of the overall trend to come. So this is only what you want to see in higher time frame. The zones you marked for your take profits. Then you go back to your lower time frame, and then you extend your take profit to those zones. What are those zones? These zones that you expect what? These reversals to come from. If you do not get reversal concept at this zone, then you extend all the way to the other extreme or breakout block there. So everything you'll be doing now is what? Buys. Everything you'll be looking for what? Buys. And then you use your what? Continuation structure to look for buys. Your breakup structure, liquidity, and then your point of interest. Breakup structure, liquidity, point of interest. Breakup structure, liquidity, point of interest. Breakup structure, liquidity, point of interest. All the way until market tapped into what? This higher time frame POIs. Where your what? Take profit should be. Where you expect what? Another reaction for higher time frame to come into for markets to make another what? Impulsive move to the downside. And that impulsive move, the target is what? To take out this last low that what? This correction move is coming from. This is the only thing you need to do. So I want you to go and rewatch this video, rewatch it, try as much as possible. Go to fairs. You trade. Go to fairs if you don't trade BTC, because most of them I trade only BTC and gold. Yeah. So you're going to go to any fair. Did exactly what I did now. Mark higher time frame POIs and mark the original trend. Read the market structure, which we talked about in our class. Read the liquidity, because you need liquidity to take your buy or sells. All of those zones, all of these things, you have to mark them. So, and then you send me, if you have a question, you can come to my DM and ask me questions. I'm here to answer all questions. So I know by this class, I built a lot of confidence for you to take buys or to take trades, because you follow all of these higher time frame bias, all of these higher time frame structures, all of these higher time frame direction of the markets. You follow it, and now you use it to trade the market. You know where to set your TP, and you know where to set your SL, based on the liquidity concept we talked about in our second class. So now this is a very directional buy is one of the best ways to know where to set your TP. So if you watch this video clearly, you understand that okay, this is this is what you need to know to take your trades, where you expect markets to reverse to, and how to combine the higher time frame and lower time frame structured trades. So when we are buying all of these zones, 4-hour zone, all of these supply zones in 4 hour, the zone we expect markets to react from. You see, this is a 4-hour supply zone. This one. It's a 4-hour OB supply zone that matches what? A higher time frame POI. That's why you get this massive reaction. And this higher time frame is one of the zone that we expect what market to give us what a reversal concept. Now market tapped into this and break structure to the downside. So we expect markets to come back and give us that reversal concept for us to continue selling down. If we do not get that reversal concept, and they will just go through the extreme supply zone. So this is it. So this will be the end of this class. And then we got one class left, which is a very deep dive into lower time frame POIs. Now,